Hello, everyone, and welcome to a new OpenViews 22 panel. Today's panel is titled How to Build Trust in Open Banking and the Value of Working with Partners. This is one of the key topics that everyone should consider when building new financial solutions. And today we have the immense pleasure to have with us experts in this subject who have managed to succeed at this endeavor in multiple geographies. I'm going to start by making a quick intro about each one of our panelists, and then we'll start with some questions. First, we have Juan Guerra, CEO at Revolut Mexico. He has previous experience in companies like RappiPay and also in the financial sector as Chief Innovation Officer at Citibanamex. Dileep Thazhmon, co-founder and CEO at Jeeves, an hyper-growth international corporate card platform. Dileep is actually a successful serial entrepreneur and has worked in financial products like PayPal. And finally, we have Jesse Dhillon, who is now the co-founder at Basis, a recently founded company that improves the way capital is extended to businesses. Jesse previously worked for more than 4 years as a product manager at Plaid. So first of all, I want to thank you for your participation in this panel. I am personally extremely excited about everything we're going to be covering today. And I might start with a first question about some of the companies that you're working on. And I think, Juan, Revolut is present in more than 28 countries around the world. Dileep, Jeeves is also expanding very rapidly across Latin America. So maybe the first question will be for the two of you. What are the keys to launch successful new financial products in new markets and managing to get users to trust your service? And what are the particular challenges that you're facing in Latin America?
I'm happy to start. I think, first of all, it seems obvious, but make sure you're solving an actual problem, right? Just do some research, do your homework, and just because it's clever doesn't mean people care. Make sure you're going to be providing something that solves people's problems in the way that they would like their problems to be solved. Secondly, make sure it's a painkiller and not a vitamin. People are much more likely to take a painkiller that really moves the needle for them day to day than a vitamin makes their lives a little better. So once you've cleared this, one of the issues that we often face is as fintech scales globally and may become successful in one place, and then we look to replicate the exact same formula somewhere else. But there are some greater or smaller differences that need to be taken into account to be really locally relevant and really hit the spot locally. One of the big advantages of Revolut is that we're a super app, so we have a bunch of various products all in one place. But so in a sense, we have something for everyone. But if you really want to hit the spot, you need to make sure that your product, at least one of those products, absolutely delights your customer. And that means that you have to tropicalize your products to, of course, local regulations, but also sometimes the local palette. So I'll give you examples. Credit cards, just sorry, my baby also has opinions on this. So credit cards, you would be surprised how different they can be across LATAM. So in Colombia, because caps are rates, people max out their credit cards. They only need to know how much they still have left to spend. Whereas in Mexico, people are cautious of how much they spend. They want to know how much they've spent so far. In Peru, people want to know the balance in USD. So there's a lot of variation. In Brazil, people pay their credit cards through something called boletos. So there's a lot of local variation that you can ignore at your peril. I think being able to benefit from global scale, local is one thing, but being able to hit the spot locally is another. And if you can combine both, as we're trying to, then you're really on the path for success.
Yeah, I think I agree with a lot of that. And first, thanks for having me on. I think it's awesome to see the growth of Belvo. And I think Belvo is one of our first 5 customers in Mexico, like when we started a while ago. So it's great to kind of be a part of this. So just to kind of reiterate Juan's points, I think there's a couple of things that have changed. So if you were trying to build Jeeves 5 years ago, I think it would be a much harder challenge to do so, because the infrastructure, what I call kind of like the fintech V1, wasn't present there. And so for our perspective, really our goal is to build a global business bank that works in any country and any currency. And so most fintechs tend to be country specific, but the way we kind of looked at it is, if you were to build your own infrastructure layer and then really just plug in the bin in each country, what would that look like? And so, if you look at a processing stack for a card, you have the top of the funnel customer acquisition, you have the processor, you have the program manager for regulation and compliance, and then you have the bank license that you get to issue in that country. And the first three, we standardize on our own infrastructure using vendors like Belvo, et cetera, to be able to check into the bank account. And so when we go from Mexico, where we have our full principal member license as a local issuer, to Colombia, to Brazil, where we also have our own local bin, the only thing we're changing is that number 4, which is that bin. So kind of going back to your original question of like, how do you look at launching in a lot of different countries differently? For us, it came down to the infrastructure. If your infrastructure itself doesn't have to be rebuilt for every country, then your time to launch is really the time to get that bin, which is about 2 to 3 to 4 months, not 8 to 9 to 10 months. And then the second huge advantage you get is we only focus on businesses, but you can provide real-time cash reconciliation, which is really an advantage if you are a business with multiple locations. And one of our central theses was, in the US, you have a large central market with a single currency, but internationally, you have multiple markets with multiple currencies. So if you're an entrepreneur in Mexico and you're expanding, you're going to end up in Brazil and Colombia. And now you need a separate card there versus a separate card in Mexico versus a separate provider for Pix and so on. And so the advantage that we had was, if we brought that infrastructure centrally, we could provide that instant cash reconciliation, and we could provide one card that could be used across the different regions and show you in real time the spend in pesos versus the spend in Colombian pesos versus waiting for the end of the month to kind of close your books. So that was kind of our big, epiphany of like, if you were trying to build something to scale across multiple countries, instead of just building it for one country, to Juan's point, and then seeing what you can take to the other country, how would you build it if from day one you wanted to launch in 20 and 40 countries? You would build it differently, because the infrastructure becomes your advantage. And the vice versa. Like if you were only doing Mexico or Mexico and Brazil, we never would build a second layer, because that overhead is a lot for 2 countries. So it only makes sense at a certain scale and at a certain number of countries for us.
That's super interesting. I think, Dileep, you mentioned about building a common infrastructure, and Juan, you touched on the point of building different products within one application. Maybe the next question can be around open banking and the potential that you see, particularly in Latin America. Juan, Revolut uses open banking in different regions. Dileep, you are using already open banking and open finance in LATAM. What's the potential that you see in the region where it still has not exploded?
Happy to go first. I think it varies country by country. Some countries have a more evolved environment. In some places it's more regulated. In some places it's not at all. Not at all doesn't mean it's not happening. In some cases, it means it's happening even more. And it's got different uses as well. So Pix, for example, in Brazil, is quite different from being able to port customer data from one institution to another. So sometimes it's also useful to define what exactly we mean by open banking. But in general, I would say open banking is phenomenal news for consumers, for users, for businesses, because it gives them the power to choose their financial services provider. They're much more able to initiate payments from wherever they want. They're much more able to take their information to shop around for the best offers, to get the best loan rates, the best accounts to suit them. So it starts to flip financial services on its head. We're just in the early days, so we haven't seen the full potential of open banking in LATAM, but it certainly helps smaller players compete with the bigger, more established players that just happen to capture everyone's details because they had a branch close to their house. So let me explain this from the user's point of view. If I want a new credit card with a new fintech company, it's kind of hard for that fintech company to know how much money I'm earning, how much I could actually pay back, But if I can, through open banking, let this new company know what my cash flows look like from month to month by connecting my bank accounts, it also helps, and it also provides more certainty around my identity, because fraud is certainly a big issue in the continent. That makes that company, puts that company almost at the same level as my usual bank. It helps them make a very informed credit decision, which helps me as a user access much better rates. I make companies out there, financial services companies, compete harder for my business, and that's really what it's all about.
Yeah, I think similarly, when I look at open banking, the value is that it kind of levels the playing field. You can start a company a year old and still be competitive with something that's 100 years old. And that would not be possible without data. And what open banking is it gives you access to data to make better decisions, to provide lower rates, to basically bring the curve down. And if you didn't have that, you would basically not be able to open your product to as many people, because you would need more data, and get access to the data wouldn't be as simple as like clicking a button and looking at someone's account. I think where it gets a little more difficult is there is a difference between consumer and businesses, and I think a lot of the focus has been on consumer, and so it's good to see now some of the movement towards the business side as well, because I think the potential on the business side is probably even larger, and it's also a few years behind kind of what you see on the consumer side. So it's still very, very early days. I don't think a lot of the fintechs that are building today could be able to build without some form of data aggregation and data access. And I think that's kind of what I see when I look at open banking, which is that ability to give you a level playing field so that you don't need to, forecast a loan like a bank would do 10 years ago. You can actually underwrite the business today and then monitor it. And based on that monitoring, change kind of what you're providing. So it just gives you the ability to provide new models. And LATAM specifically, I think there's a very big delta between what banks provide and charge and what kind of fintech providers can do there. So, I don't think anyone's trying to replace a bank. I don't actually know if that's a realistic outcome, but I think there's huge gaps where some businesses can operate in that need different services than what a local bank could provide. And so, we target the top 25, 30% in the market. We don't really do the long tail, but for that 30%, we can do 30-day, 60-day, 90-day loans, etc. Right? If you were doing that for the whole long tail, it would be a different product. So that's what open banking gives you. It's that ability to like move your slider, focus on a niche, use that data, and then provide a better targeted product for them.
So you're saying something that is that's great for the customer, right? So I think Juan said these open banking are great news for the end user. But when we also talk about open banking, there's the concept around trust. And so it's something that on the one hand, it's great for the user, but we need to gain the trust of this end user to link their accounts, to maybe provide their credentials in order to link their financial information. Jesse, you've worked at this for probably longer than anyone in the market. Maybe you can tell us a bit about how you see, or have you seen companies managing to increase or gain this trust from users. And we'll also like to get Dileep's and Juan's perspective on the respective business on that particular topic.
Yeah. That's an interesting question. There are definitely people who've been working on it longer than me, just to be clear, but I appreciate the praise there. I think, there's this sort of idea that, that at Plaid we resisted, which was to be dumb pipes. A lot of our customers kind of wanted to have an engagement model where they could seamlessly swap out Plaid's API for one of our competitors, and just on how various factors of their business would dictate which one they send a user through. And as our customers, I certainly understand why you'd want to do that in the short term, like from a bottom line perspective. But the thing is, a financial aggregator like Plaid should not be, and has a strong interest in resisting being just sort of this layer in the background that kind of operates in the shadows and receives consumer financial information, but the consumer doesn't actually know who they are. Like when you contrast what existed before Plaid, right? You've got in the US, you've got the big three credit bureaus, and I don't know if any of you guys have interacted with these bureaus, but if you're an American, they have profiles on you, and the first time you see one, you're very surprised. Like, how do they know all this? How do they know about this credit card I opened when I was 17 at Macy's or whatever? You want to very much avoid that experience with the new generation of fintech. You want people to feel that everything that is happening is above board. There's no secret behind the scenes data collection. You're always involved in the loop. So I think if you keep that as your North Star, whatever you're designing, that you're going to commit to transparency to the user. You're not using shadowy intermediaries, you'll be fine. There's a competitor to Plaid who famously is well known for yes, aggregating financial accounts, but then summarizing the contents of that aggregation and selling them off to investment firms. When people find that out, when people find out that they're part of this like insights package that's being sold on Wall Street that is potentially a multi-million-dollar product, they genuinely get upset, and I can understand why. You want to avoid doing anything like that.
Excellent. And maybe Dileep and Juan, what's your perspective on managing so getting trust or gaining trust from end users to access financial data to provide them with better services?
So I kind of see it as almost like a contract, right? So it's almost like the user is agreeing to certain information that they provide in return for lower rates, a cheaper card, a cheaper loan to buy a house, right? So I think where you lose that trust is when you go beyond what you would expect in a normal transaction, right? So there's some information like, obviously, I need to know how much cash you have to be able to give you a card, right? That's a normal data set that I should be able to access, right? I think, to Jesse's point, there's two components that we try to do a lot. One is just kind of minimize what's the data we need, right? Because it's like, okay, what do you actually need to make this decision to give them a credit line or to give them a card, right? And that's all we try to get access to. And then two, to have that transparency, which is like, okay, here's what you'll get in return for giving me more data, right? So it's almost like what you're trading that data for, as opposed to like being blindsided. Because the worst thing is that feeling like, oh, I thought I only gave you my account access. Now like every purchase I've made on my personal card, like that wasn't part of that contract, or even that implicit contract, even if it's not something they're like actually signing to say that, right? And most people know what that line is, and I think that's what we use a little bit as our guiding star, which is like, if you found out on the other side of this that we were using X data, like how would you feel? And if the answer is you're not sure, you probably shouldn't be accessing that X data without telling the customer directly. And with trust, you only get one chance, right? You can build and build and build, but you get one time it goes, and then you're not getting it back. So, it's much better to err on that side of like, what is that minimal number you need to be able to make a good decision? And we don't want to make bad decisions because that affects everybody, right? If you have risk that's kind of off the charts, everybody's paying for that, even if it's one person that did it, right? So it's good for everybody to have that risk lower. But I think there is a cognizant component of like, this is what I expect in return for the data I'm giving you. And if I'm giving you more data, what am I getting in return on that? And that's where I think we need to be more transparent so that people know. People are smart. I don't think people are idiots in terms of like making quick decisions. I think people are very smart. And like, I think it's when you tell them, here's what you're giving me, here's what you get in return, they can make that decision for themselves. It's the blindsiding that becomes much more difficult when they find out later.
Yep, excellent. And maybe one topic that Dileep started to mention is that there's a difference in B2B, B2C when it comes to open banking, and I think also regarding trust is that's very important. Maybe you can comment, especially starting with Jesse. So that you've been working mainly with B2C, facing a bit of B2B. Now you're within your company, your new startup, you are trying to improve this process for B2B companies. And so wanted to see what difference can you envision in gaining trust from either consumers or businesses in the market, and also how different you see the benefit in open banking in general for the two use cases.
Yeah, wide question. I'll try to focus in on sort of two areas that I think are going to spell out the difference here. So on the open banking front, I think that, so I'm speaking from a U.S. perspective. In the U.S., there is not regulator-led or government-led open banking. It's an industry-led standard, and standard is sort of framing it too strongly. But what I think is key to sort of keep in mind is at this time, open banking, these standards like FDX, they're all emerging. They are guided by, apart from the banks, of course, who are guiding them, they're guided or they're informed by the major aggregators like Plaid and Plaid's competitors and some major apps as to what their content should be. So those use cases are the ones that are getting the voice, and these are the use cases that these APIs are being designed for. Unfortunately, the state right now that I see is that they're not quite adequate for business use cases, and I think it's going to take some time to course correct or to expand their mandate to ensure that those are covered. So I have not seen that like business ownership identities are being addressed through these APIs, so that you can do an effective like KYB process by connecting to someone's bank account. I have not seen that financial accounts of a type other than checking or savings or credit card are being like rigorously modeled. So like virtual accounts or sub accounts, these are not really properly envisioned. So you can, unless you have a lot of deep knowledge, you're going to find yourself, for example, overestimating or underestimating a business's actual cash on hand because you sum the balances incorrectly, things like that. So in the US, I hope that the mandate expands to cover business account coverage. So, to your other question about trust in the business context or in the B2B context. So what I would say there is my opinion there is that you should expect a little bit of an easier hill to climb versus consumer. I think in my experience, business accounts are sort of held at a different kind of sort of distance from the user. A user holds their personal accounts, like a consumer holds their personal accounts, very sensitively, and it feels that they contain personal information, about their lives. If you are a developer serving businesses, your end user, may just be an employee of this business, or it may be a small business where the owner and the user are the same person, but still it's not necessarily a personal account. So they have a little bit more. They have a little bit more of an expectation that I've got to divulge this information. This is sort of the name of the game when it comes to getting financial services as an SMB. The other thing that I think has a bigger impact, as somebody who's designing these services, is I think that in general, you'll have a user. You should expect a user who has higher intentionality. So, to take the Jeeves example, if you are signing up for Jeeves and you want to get underwritten, that's a process that, like, generally, you started off the week, Monday morning, you're the accountant or comptroller for this small enterprise, and your CEO told you, look, this week we've got to get a new line of credit. You've got to get that done, right? And if that connection process involves like 2 steps or 50 steps, you're committed to getting it done. If you've got to go through a bunch of MFA or verify your identity, you're going to do it. Compare that with a consumer who maybe like heard an ad on a podcast for Robinhood and was intrigued, and if they couldn't connect their account, or if it felt kind of shady, no harm lost. You'll forget about it in 30 seconds. So
I mean, I think when we look at primarily the business account, I actually think it's a huge area for kind of like building in the space, because it is different in different countries. And I think one of the key trends we're seeing is this whole concept of globalization. Like companies more and more have entities, employees, contractors, someone in another country that they need to like account for in whatever form. And so one of the big areas that I see kind of improvement is this ability to have a holistic view on different accounts, right? If you look at companies, especially in LATAM, they tend to have funding accounts that are not in LATAM. It's usually in USD or in the Caymans. But that funding account is a big part of how you evaluate their creditworthiness. And so, we built this internally, we buckle it together with other kind of providers in different regions. But I think that's what, is an area that has a large gap, which is like, how do you start holistically looking at company spend, which is different from user spend that tends to be in 1 or 2 or 3 accounts and tends to be country specific, right? But company spend, especially as you get larger, tend to be multi-geography. And so there's a big gap on that side. And then the second one that we see as a large area is this whole concept of like auto debit or being able to like pull funds. And that tends to be country specific, different in each country. And you need to have a certain level as a company trying to do that auto debit. So that's another huge area that, in the US, I think there's much more development. But as that gets built out in LATAM specifically and other regions, you'll see kind of the value kind of being derived by fintechs that start building on top, because it makes the products a lot better.
And maybe Juan, from a B2C perspective, you mentioned at the beginning that the products that you need to provide to users should be painkillers and not vitamins. Obviously, accessing new financial services is a huge painkiller in Latin America. You have to overcome the trust barrier. How do you see it? I mean, Revolut has implemented open banking in Europe. How do you see this moving in Latin America?
I can't speak for very many countries in Latin America, but I think in Mexico the so-called fintech law will institutionalize open banking sooner rather than later. I think it's been in the works for a few years now. It should be coming out soon, providing a lot of clarity and certainty to everyone in the space. With Brazil, I mean, the case of Pix has been phenomenal. But outside of those 2 countries, I have very little familiarity with the open banking environment of the other places. At Revolut, in the UK, for example, it's brilliant because it just provides for such a seamless experience, and it, from the customer's point of view, and it really makes everyone compete on the same footing. As Thazhmon was saying, it's a leveler, right? It levels the playing field. So to give you a concrete example, typically, fintechs will require top-ups from a bank account to hold a balance as e-money or whatever it may be in the various jurisdictions, the various license types. In the UK, a user that wants to top up the Revolut account simply clicks a button, and this pulls funds from their grandpa bank into the Revolut account, which is how they like to spend and use their money. So it's a beautiful experience from a customer point of view. Now, this is a double-edged sword from Revolut's point of view, because this also means a user can pull funds out of its Revolut account into another competitor's account, but that's okay. Bring on the challenge. We want to compete in delighting customers, not in having a large network of branches.
Excellent. And I think we're only seeing the beginning of the benefits of these models that can be built on top of open banking in Latin America. How do you see the ecosystem evolving, knowing that you've seen this in different regions, like exploding in the last years? What is your take on how things are going to evolve?
I can give a few thoughts. So one, I think the first thing that we're seeing that I think is going to change is there's going to be more standardization. LATAM is looked at as a single ecosystem, even though there are obviously different countries with different ecosystems within the country. But I don't think the open banking that we have today is standardized. And so you're kind of dealing with 4 different products in each region that you operate in. And so I think the first thing that we're going to see, and again, this is more from the business side, but the first thing I think is going to happen is a little bit more of that standardization of like, what is the minimum data set that you can pull out, and have that be kind of consistent across the different regions, which we don't have today. And then the second thing, which I think is going to be really exciting, is this idea that once some of the features that like increases to what it's in Europe or what it's in even the US, you're going to start seeing fintech start to build on top of that. And so it really is kind of what I refer to almost like this fintech V1, but you can build version 2 type products on top of that that are looking very different from what a legacy infrastructure player would have built that. So those are the two things that I see in the next 18 to 24 months. One is this standardization and parity across regions, and then this ability to start building on top of that. We're seeing that right now with even stuff like stablecoin, which is, again, it's using some hooks to check, but really the product, it then like off ramps completely differently and then on ramps again. And that's what I think gets very exciting, which is like you can build these new product suites, product types, because you have a base of underwriting, a base of checking, a base of monitoring that you don't have today. And that delta between where LATAM is and where the US or Europe is what I think is going to start kind of closing in pretty quickly.
Cool. Thanks a lot, Dileep. So the second part of the panel, we're talking obviously about building trust, but the second part is so it's around also how you see partnerships, right? So when we look at open banking, many people can ask themselves questions about why big companies don't build that themselves. And Jesse, you've been at the side of being a partner for many companies. Dileep, Juan, you are in the process, or you have decided either to build or buy. When you see, and not only around open banking, but when you take on partnerships for financial services, how do you see that? What is key strategic that you need to build in-house, and what are things that you should really delegate in order to be successful?
Yeah, I'll talk a little bit about my experience with that question. So, specifically with respect to open banking, and again, speaking from an American perspective, these open banking programs that that have popped up in the U.S., that are offered by some of the major banks, are still like very early. So I think that what you should expect, if you're starting in the U.S., what you should expect early on is that looking at your hiring roadmap around like employee number 20 or so, that you will start to bring on an industry partnerships person, somebody with experience in the sort of like more established traditional financial industry, somebody who has connections to a lot of these banks to help you form these relationships and navigate that world. We're just starting out, but as we look at our hiring roadmap, that's exactly where we place that person. These people at Plaid were instrumental. We call them the biz dev team early on. So you want to look for somebody who has that kind of background. In terms of, to your specific question, like what are some principles you can look at for, partner versus do in-house? Specifically with aggregation, if somebody were going to build an aggregator or do some kind of aggregation again in the US, you will definitely have to build early on. These banks, even the banks who have API programs, they're very early on in their in their thinking. They have no sort of real answer to the question of how do you expect developers to onboard, how do you expect developers to even learn that your program exists and find the right person. So you'll definitely, if you need to get to market before employee number 20, which I don't see how that wouldn't be the case, you'll have to build in-house, but you should always keep in mind that you're building just so that you can get on the radar of these banks, and then you can establish a relationship. Like the goal is not to sort of permanently subvert or antagonize the bank.
Yeah, so just on I think the first question of whether we look at like building in-house or using externally. So for us, we do work with a lot of vendors. The kind of matrix that we use is how critical is this to the business? Are there multiple options? Because we don't want to be single-threaded if something fails. And then the last kind of component is if we were to build this in-house, can we do it better, right? Because if you're going to build it, it's going to be worse than what you're paying for. That's not a great outcome, right? And so I think specifically, like when I look at some of the stuff that obviously Plaid, Belvo, et cetera, do in terms of pulling data, there is value at scale in being able to do that across multiple players, meaning us just building it in-house does not get that scale to make the product better. That Plaid obviously does, and obviously Belvo, right? So the product gets better because you have so many more interaction points, whereas we will just be doing one use case and like as a scale of 1/10, 100th of what that would look like. And so for us, like that doesn't make a lot of sense, and it's better to kind of pay for like the best in class and get access to that data and use that data as we need, as opposed to kind of building that in-house versus something else in the stack, like I don't know, a processor or something that could be much more directly like relevant to what we're building. So that's the lens we look at, which is like if you're building it in-house, are you going to build it at least as good or better, and is it going to get better over time? And I think in both scenarios, for something like this, there is a value in scale, especially if it's not just a product for you internally, but that's just specific to kind of how we look at it.
So maybe some final questions as we're almost out of time. So one, I mean, we've talked a lot about trust and about how to make open banking successful. So but still very early days. What is needed in Latin America to make it successful?
So I think there's something to be said for if you want to build trust, you need to trust the user first. If you're offering credit, right, that's a good way of showing that you trust the user and expecting reciprocity. If you're an unknown brand and you want people to put their life savings in your account, that's going to be really hard. And if you're asking people for too much information up front, that's also going to be really hard. So give people a chance to get to know you, give people a chance to trust you, show you trust them, and then you can expect reciprocity.
Yeah, I mean, I think the way we kind of see it is there's a lot of an adoption curve that is still kind of early. So like in Mexico, for instance, trying to get access to SAT, some people are okay with it, some people are not. And so there's almost like an evangelization phase of like, here's what you're getting in return for like providing that, right? And I think that's the part that we kind of need to do a better job as a company. And I think just even like just the industry and the standards of like, hey, you are sharing some data, you are providing access, but here's what you're getting on the other side of that. And I think to the point of trust, it actually goes both ways. Like I'll give you an example. In Europe, we noticed one company was actually sending funds to another company and then trying to claim a chargeback, right? And so again, trust is not, it's a two-way street, right? It's not just us like trusting them, it's them also providing us with the trust to like keep providing capital to them. But one of the reasons we saw it was we were like, wait a minute, this is the exact amount going between two components that we own, and like something's off here, right? And so that's the additional value. It's trust for the whole system, right? It's not just trust for that person. The system gets better because we can catch that quicker, and now you're not penalizing someone else by increasing rates because someone else did something that was nefarious, right? So that trust is individual, it goes both directions, and it's also for the entity as a whole. And that's the thing that I think if I was looking at what could be done better, and I think it'll happen over time, is just that evangelization to know what you're getting in return for like providing that access, which is good for the ecosystem as a whole.
Maybe Jesse, what would you say, knowing that you've seen this in the US? What do you think is needed in other regions like LATAM?
Yeah, I'll just try to briefly add my like general thoughts, since I don't really know much about LATAM fintech. I would just try to think really deeply about sort of why the rates of underbanking are so high, and why it is that people apparently are so mistrustful of the ordinary financial institutions. Dileep brings up a funny story, but an interesting counterpoint to that, which is that the financial institution is so kind of baroque or restrictive in that sense because the the opportunities for fraud and the willingness to sort of be very above and beyond in terms of your cleverness to exploit these opportunities, exist. I think, look, I actually think in the U.S., we don't really appreciate kind of how good we have it, right? Like even if you look at rates of fraud between the U.S. and Europe, we do a much better job here in terms of keeping it down and preventing a few bad actors from ruining the spoils for everybody. So trust. I don't know that I'm saying anything super unique, but trust is a two-way street. But the fact that today, especially with younger people, they're ready for, they want American style services. It seems like they want a fintech system that works as good as the one in America. So huge opportunity if you can sort of navigate that double-edged sword of trust.
Well, thanks a lot, Juan, Dileep, and Jesse. It's been a tremendous pleasure to have you on stage. Super interesting insights, and we wish you all the luck in of the world in all the endeavors, and we'll hope to see you soon in future panels of Open Views.
Thanks, Uri. Appreciate it.
Thanks for having us. Cheers.
Thanks, Uri.
Thanks everyone for attending. Bye-bye.